All right, hey everyone, this is Scott here again with my next episode of my live option trading series where I show you all the trades and all the adjustments I made this past week. And this video here is very jam-packed with tons of new trades I made this week, many of which already came off our profits. So overall, this was a very good week for me. And then alongside that, you'll see some technical analysis on the S&P 500 and the NASDAQ so you can see where my thought process is with this market. And as you'll see here, things are definitely still looking very, very bearish, which if you're like myself and you're pretty much a perma-bear at this point, that's a very good sign. And so like I mentioned, because this video is so jam-packed, we're just going to get right into it here. But before we do so, in case you are brand new to the channel, I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. And so with that being said, I'm going to stop here and play a few clips that I recorded throughout the week that again will show you all those new trades and the various technical analysis I've been doing as well. So let's get started. Okay, it's Monday, March 7th, and today was actually a very exciting day because we saw a massive sell-off across the entire market. And this was actually something I was expecting to see coming into this week because if we come to the charts real quick here, this is SPY, an ETF that tracks the S&P 500. So we'll go ahead and zoom in. And so as I've been showing in my previous live option trading videos, in particular, I've been watching these two lines very, very closely. This major support level right around $428 per share on SPY, and this major resistance level right there at around 440. And that's because for the past week or so, we've been stuck right in that range. And my expectation was if this major support level does break, which today it did, then we would very likely see another large sell-off, which would basically form the beginning of the next very large leg down lower for the market. Basically the same thing we saw here in the recent past, and also back in January, this was the first major leg down lower that started this whole sell-off. And so my guess at this point is that we are going to continue moving down lower until we reach the bottom of this candle right there. Right, this here was the day where all hell broke loose once Russia officially invaded Ukraine. And of course, no doubt that definitely spooked the market pretty significantly here. And so the low of this candle is right around $410 per share or so. So again, my expectation at least is to see SPY at least come down to this point to retest the lows here. And of course now this former support level has been flipped to resistance. So if we do see a reversal in SPY in the near future, my guess is that reversal or that bounce is going to be stopped out right around that point, just below $430 per share. And then, of course, alongside all this selling pressure, if we come over here and go to /VX, this is the VIX futures contract. And the VIX futures, or the VIX index, is used to measure the implied volatility for the S&P 500. And it's basically a measurement of fear in the market and also a measurement of how inflated option prices are right now. And that's because, in case you're not aware, implied volatility here is baked into the prices of all option contracts. And so when implied volatility increases, that's also going to increase the prices of options across the board. And then conversely, if implied volatility contracts, that's going to reduce option prices. So again, here with the VIX futures making new highs in the recent past, currently topping out at 35%, because implied volatility is measured in terms of a percentage, that means option prices are spiking across the entire market as well, as they already have been in the recent weeks. And so this basically means two things. Number one, right now is a great opportunity to sell options because their prices, as I've explained, are so high right now. So you can sell credit spreads or iron condors, covered calls, cash secured puts, strangles, straddles, whatever, and you'll collect a lot of credit for doing so. So that's the first thing. And then number two here is if you do have any short option positions on right now, then chances are you are currently going to be losing money on those trades. And that can happen even if your options are still out of the money or if so far you have been getting the directional move correct. Right? For example, if you sold a call credit spread on some stock and the stock did move down in price a little bit, and that's what you want, but if implied volatility has expanded so much to more than compensate for that down move, then the net effect is you could still be down money on the whole trade. So bottom line here is if you are currently seeing losses on your current short option positions, even though your options are still out of the money, then don't be alarmed. Chances are it's just because implied volatility has expanded so much. And every time implied volatility expands, what does it do? At some point, typically pretty soon, it comes back down to a much more normal level. right? You can see that happening right there. Huge expansion in implied volatility, and then it collapsed back down to a normal level. Same thing again here. Big spike and then a collapse. So therefore, at some point in the relatively near future, I do expect to see this big expansion of implied volatility right now to eventually top out and come back down to a more normal level. Now today also was a very busy day for me as well, so we'll come to the monitor tab real quick and I'll show you exactly what I did. And so today here, in order to, like I said, take advantage of this high level of implied volatility, that's why I put on 3 new positions today. And also I took off 2 positions for profits as well. So first up here was my new position in US Steel. X is the ticker symbol, and this one actually came off today as well. So real quick, let's go to the charts and take a look at what happened there. Go to X. And then also we'll change the time frame on this chart and go to a 5-year 1-day chart. And then we'll first zoom into this area right around there, which happened back in mid to late 2018. Now this line here in white is obviously not super clean, but as you can see all through this time here, there was a decent amount of support roughly around 34 bucks per share. And you can see that occurring right around here in this zone. Also again right there, again right there. Although it looks like for a brief time, basically just 1 day, it did breach that point, but US Steel still managed to stay above that support level. And then also one more time right there. Again, not super clean, but generally speaking, there's some pretty significant support somewhere around 34 bucks per share. Now, once the support definitely failed, once US Steel committed to go below that point, this line now flipped to resistance. So therefore, if US Steel ever got back up to that point, my expectation was to see a reversal. And so now if we fast forward to today, let's come over here and then we'll zoom in on the chart once again right there. Again, here is that former support level which flipped to resistance, and look where US Steel got to today. It came up all the way and just perfectly touched that resistance point at 34 bucks per share. And then as I was expecting to see, once US Steel got to that point, it totally reversed and actually ended the day down by about 22 cents it looks like. And so my trade here was to sell 2 call options once US Steel got up to and touched that resistance point at around 34 bucks per share. And in particular, if we come back to the monitor tab and take a look, so as you can see here, I sold 2 contracts of the 36 strike call option in the April 1st weekly expiration cycle. So keeping in mind that resistance point at 34 bucks per share, I chose the 36 strike again just to give myself a bit more cushion in case I was wrong. Or if perhaps that resistance line was somewhere around 35 bucks per share or 36 bucks per share, right? Like I showed you on the charts, that line was not super clean, it was not super clear, so it could have been anywhere around that price point. And then once US Steel turned around and sold back off, I bought back and closed those 2 contracts and did so for half price. Right, initially I sold those 2 call options for 180 bucks in premium, and then I bought them back for a debit of 90. So that's a profit of 90 bucks per contract, which in total is a profit of 180 bucks. Pretty nice. So that's US Steel, and then my second new trade today was in AMD. For this one, I sold 1 contract of the 99 strike put option, also in the April 1st weekly expiration cycle, and also did so for a credit of $475. So for this trade, let's come back to the charts and go to AMD. And then also we'll change the time frame briefly on this chart as well. We'll go to a 3-year weekly chart and take note of this white trend line right there. So this trend line goes all the way back to, it looks like, early 2020. And as you can see, there were many times in the past where this trend line held as a pretty nice support level. And in particular, if we change this back to a 1-year 1-day chart, and we'll zoom in a bit more there. So in the very recent past, you can see there and also right there where, once again, this trend line held as a very nice support level. So today, once AMD got back down to that point, that's when I stepped in and sold that put option there. Now, unfortunately, as you can see here, AMD has continued to push lower after selling that put option, and it's now currently below that trend line. But as you can see back in January, for example, AMD did get below that trend line once again. However, in the end, this line still held as a pretty nice support level. So in a similar fashion with US Steel, obviously this trend line is not super clear, right? You're never going to find a perfect trend line or a perfect support level where the stock just exactly meets that point every time and then bounces off it. So anytime you're doing technical analysis, support, resistance, that kind of thing, it's always going to be an approximation. But point is, around this zone right here, I do think is a decent buying opportunity to play for a short-term bounce. Of course, this could also be the first time where this trend line definitely breaks in a significant way and AMD just catapults to the downside. In which case, if that were to happen, it also would not be a big deal. And that's because that exact kind of scenario did play out with my United Airlines position. So now let's come back to the monitor tab once again. And as you can see right here, today I also bought back to close my 2 short put options on UAL, which again is United Airlines. And for this trade, I was short 2 of the 39 strike put options. And so if we now come to the charts and take a look at that one, as you will see, this was pretty much that exact scenario, which could play out with AMD. So we'll go ahead and zoom in here a bit. And there we go. As you can see, UAL has come down in a huge way 3 days in a row. And keep in mind, of course, that my put strikes were all the way up here at 39. So this stock finished today at just above 31. At this point, I would say it's safe to say that I was 100% dead wrong on the direction of this trade here. But that being said, I was still able to close this trade today for a very nice profit. Now, how was I able to do that? Well, once this stock fell down below my sharp put strike of 39, which I believe was on Friday last week, at that point, I shorted 200 shares of the stock, right? 100 shares for each contract. So therefore, as UAL continued to push lower and lower and lower, the losses I was facing on the put options were more than being compensated by the gains on the short shares of stock. So at this point, let's come back to the monitor tab and figure out the final outcome of this trade here. And to do that, we'll pull up the calculator real quick, and I'll move this right there. So initially, when I sold these 2 put option contracts last week, I did so for a credit of $200 each. So 200 times 2 equals $400 as my starting credit. And then today here, as you can see, I bought both of them back for a debit of $705 each. So once again, times 2, that's a total debit of $1,410. So I subtract from here $1,410. And therefore, if I had no defense on this trade, I would have lost over $1,000. Ouch. But again, like I explained, once UAL fell below my 39 put strike, I shorted 200 shares of the stock. Now I'm going to go ahead and clear the screen on the calculator here, but don't forget this number, minus 1010. And so the price at which I got filled on those 200 shares of short stock was $38.48. So that would be 52 cents below my short put strike of 39. And then as you can see here with this order, I bought back those 200 shares to close at a price of $32.78. So now we subtract from here, $32.78. And that means I made a profit of $5.70 per share. Multiplied by the 200 shares, that's a total profit of $1,140. So then finally, we subtract the 1010 I lost on just the put option contracts, right? And that means the net effect here is I still walk away with a profit of $130. Very nice. So using this kind of management style or trade defense with short option positions like this, basically where you're either shorting or buying stock to hedge the contracts that go in the money, this can be a great and effective way to flip a potential losing trade into a full winner. And so therefore, once I took off this initial UAL position, I then put on a brand new one. So finally, my last trade of the day was to sell 2 more contracts, again in UAL, but now at the 30 strike. And this time I did so for an opening credit of 190. So very, very close to my first trade as well. And the reason why I did that is, once again, coming back to the charts one last time, already have UAL pulled up. Let's change the time frame on this chart real quick. We'll go to a 5-year, 1-day chart, and then we'll zoom in right around in this area there. And also let me go ahead and cancel this alert so it's easier to see. So following this white support level all the way back to, looks like late 2020, pretty much at the peak of the COVID pandemic, I do see some nice support for UAL, roughly around 30 to 31 bucks per share. So originally my first trade on this stock was to play for a bounce off a support level right there, roughly around 40 bucks per share, right? As you can see in the recent past, there were many times where this stock bounced off that price, but as luck would have it, this stock finally broke through that support level basically the day after I placed the trade. And so that's why I was looking for a potential new support level to once again play for a short-term bounce. And for me, at least the way I see it, that new support level is again roughly around 31 to 30 bucks per share, somewhere in that range. And then also, of course, this former support level has flipped to resistance. So right now, I'm definitely a buyer of this stock down here at this point. But if this stock does manage to get all the way back up to roughly around 40 bucks per share, at that point, I'll definitely be a seller. And I'll be looking to sell short call options or something to play the stock to the downside. And then also, actually, one more thing I forgot to mention. Last Friday, I was not able to record this one, but if we now come over to ETSY, ETSY, I did have a position on this stock as well, which came off for a profit late last Friday. So as you can see here with this white line, this was back in 2021, a major support level, which flipped to resistance in the recent past here. And so if I zoom in a bit more, it was at this point right there once ETSY got back up to that price point, roughly around 160 bucks per share. At that point, I sold a naked call option with a 170 strike. And as you can see here, in a similar fashion with US Steel, this resistance point definitely held pretty darn perfectly, and ETSY was repelled off that point. So that's why I was able to buy back that call option for a much lower price and make a nice profit there. And in case you want to see the entry for that trade, you can check out my previous live option trading video. But that's going to do it for today. Those are all the updates and my new trades, so I will see you in the next one. Okay, today is Tuesday, March 8th, and today I want to place a brand new trade in Occidental Petroleum. This is OXY for the ticker symbol, and as I'm sure you can guess by the name of this company, it's involved in the oil and gas industry. Now, because of the whole Russia-Ukraine crisis, gas prices and just energy prices in general have been skyrocketing pretty recently here. So therefore, as you can see here on the charts, OXY has been benefiting from that pretty darn significantly. Right, just in the matter of about less than 2 weeks here, this stock has exploded by almost 50%. Now that being said, as you can see there pretty obviously in white, I've drawn in a pretty significant resistance level. And if we change the time frame on this chart, let's go to a max weekly chart and then we'll zoom in a little bit. So zooming in right into this area here, as you can see, this line does go back many, many years, all the way to, it seems like late 2015. And all through this time, this line was acting as a major support level, which you can see right there. And again, all through in here, and one more time right there as well. And then back in early 2019, the support level finally failed and OXY fell below it, and it has remained below it ever since. But now coming back to a 1 year, 1 day chart, again with the explosion of gas and energy prices, OXY has managed in a very, very short time to get all the way back up to that price point once again. And as you can see here, yesterday, in fact, OXY did get above that point very briefly. It got to a high of just under 59 bucks per share, but it had a major reversal. And today, it's now making a second attempt to get up to and perhaps pass beyond that point. But given how quickly this stock has gone up to that point, and also if we come down here and take a look at the RSI indicator, and this one, in case you're not aware, will tell you how overbought or oversold a stock might be. And generally speaking, if this indicator gets above 70, you would consider the stock to be overbought and possibly due for a short-term correction or a sell-off. And now this indicator has gone all the way to a value of above 80. So this here, combined with the fact that we are making contact with a pretty significant resistance level, is why I'm looking to place a short-term bearish trade on OXY. And then also one more thing to point out here, let's come down to the implied volatility. Now typically when stocks go up, you see a contraction of implied volatility. But in this case, as you can see, it's quite the opposite. As OXY has been moving higher, so has the implied volatility for this stock. And this kind of thing will happen if stocks do go up extremely, extremely quickly. So what this means is, generally speaking, the options on OXY are going to be very expensive right now, but in particular, the call options are going to be very, very expensive. Basically, there's going to be a lot of call skew. So now if we come over to the trade tab and take a look at the option chain here, for this trade, I'm going to be in the April 1st weekly cycle with 24 days left to go. And here we go. As I mentioned, there's going to be a lot of call skew with the options on OXY right now. So for example, this 60 strike call option has a delta of 50, which is very abnormal. Typically, only the at-the-money options will have a delta of exactly 50. So once again, this here is a very clear indication that we do have a lot of call skew for this stock right now. And so for this trade, I do want to be a bit on the safer side because, again, this whole Russia-Ukraine crisis and energy prices are very, very volatile right now. So that's why I'm going to back off a little bit more and sell the 65 strike call option. So now I'm going to click on the bid price for this option, and then that brings up the sell order down below. For this trade, I'm going to sell 2 of these contracts. Again, 65 strike call option, and I'll try and do so for exactly 300 bucks a piece. Go to confirm and send. Buying power effect is about 1,100 bucks. That's fine. So we'll go to send. And there we go. Just got filled at exactly $3 or $300 in total. Awesome. Great. So last step here is to come down below and create my GTC closing orders. So now I'll click on the ask price for this option. And that brings up the buy order down below. So I'm going to buy back both contracts. And as usual, I'll try and do so for half price. So half of 300 is 150. So in this case, of course, I do want OXY to come down in price. And also, if that happens, I do expect to see implied volatility to come down as well. Right, again, in very special situations like this, the relationship between where the stock price moves and implied volatility, that relationship is inverted. And then the final step here is to make it a GTC order so it's always in place, and confirm and send. Send. All done. Okay, and then also one more thing I want to show you in this clip here is if we now come back to the charts and go to SPLK. So this is Splunk Incorporated, and I did also have a position on this stock which I placed last week. So this trade here, if we zoom in a little bit, in a very similar fashion, I noted this very significant resistance point right around $132 per share. And it was on this day in particular, once Splunk got up to and just perfectly touched that point, where I stepped in and sold a naked call option with a strike of 136, I believe. And then as you can see, in the same day, Splunk was repelled off that point and it continued moving lower 2 days thereafter. And so in particular, on the open this morning, that's when I closed my position. So if we come back to the monitor tab, and right there you can see my order, bought back to close, one Splunk contract, 136 strike call option, and did so for a debit of $170. And initially when I sold this call option, I sold it for a credit of 400. So bringing up the calculator real quick here, that means again, if I sold that call option for $400 and then bought it back for a debit of 170 this morning, that makes for a profit of $230. Very, very nice. And of course, if you want to see the entry for that trade, you can check out my previous live option trading video. Okay, I'm back one more time very briefly, still on the same day, Tuesday, March 8th. Just one more update to give you. If you look here, my OXY trade actually came off a little bit later today for a full profit. Right, so with this order, as you can see, I bought back both contracts, 65 strike call option for a debit of 150, exactly half price there. Now, of course, I was definitely prepared to potentially hold this trade all the way to the expiration date if need be, but if we come to the charts real quick and already have OXY pulled up, today I got a bit lucky here and OXY had a major reversal very shortly after I made the trade. So as you can see here, once again, OXY got back up to basically the same price as yesterday, trying to once again get above that resistance point, but ultimately it failed once more and it fell down very, very hard. So OXY came back down and made a low of around $51.50 per share. And it was somewhere around this time where my GTC closing order got executed and I was pulled out of the trade for a full profit there. So definitely can't complain about that. And with that being said, that's going to do it for this clip. So I will see you in the next one. All right, today is Wednesday, March 9th, and 2 updates to give you today, along with placing a new trade here in a moment. So first off, as you can see with these 2 orders there, I have closed both my UAL position and also my AMD position. So if you recall from one of those previous clips, for my UAL trade here, I sold 2 put option contracts with a 30 strike. So briefly, let's come to the charts and already have UAL pulled up, and then we'll go ahead and zoom in a bit. So again, with this trade here, what I was expecting to see is a nice bounce off of that major support level, right around $30 to $31 per share. And yesterday, we definitely saw part of that bounce, and today, even more so. So in this case here, a very simple and clean trade, right? Just sold some put options to play for a short-term bounce, and that's exactly what I got. And as a result, if you come back to the monitor tab, a bit earlier today, that's when my GTC closing orders for this UAL trade got executed, and I was taken out of the trade for a debit of $1 per contract. So I did adjust my price on this closing order a little bit. Originally it was 95 cents, but I changed it to $1 just because this stock bounced so hard today and I wanted to get out and book those profits. So ultimately, if I bring up the calculator real quick here, if I sold 2 put option contracts for a credit of 190 each, and then like I said, I bought them back for a debit of exactly 100, that means I made a profit of $90 per contract times 2 contracts. So that's a total profit of $180. Very nice. And then next up here is my closing order on my AMD trade. So also this one you saw me put on in one of those earlier clips, right? In particular, I sold 1 put option contract with a 99 strike. And for this trade, let's come back to the charts and go to AMD. And so for this trade, you may recall this very important trend line I drew in white. And this one goes back actually quite some time, many, many months in the past. And so if I zoom in here, as I showed you, I was hoping for a short-term bounce off that trend line once AMD got down to this point again. Now, as you can see, AMD did get below this trend line for a little bit, and that's probably because there was some crazy selling going on in the market earlier this week. But for the most part, this trend line still held as a nice support level, and today Today in particular, we are seeing a very nice bounce. And so then ultimately, just a few moments ago, my closing order on this trade got executed and I was taken out of the trade for a nice profit. So once again, we'll bring back the calculator. And for this trade, I sold that 99 strike put option for $475 as a starting credit. And today, as you can see there, I bought it back for a debit of $235, basically half price. So we subtract $235, and that makes for a profit of $240. Very nice. So those are my two closing orders for today. And then also, like I mentioned, I do want to place a brand new trade today as well. And so for that, I'm going to trade once again UAL. And the reason for that, if we come back to the charts and go to UAL, this stock now is basically right in between these two major important levels, right? This major support level right around $30 per share, and this major resistance level right around $40 per share. So right now, I don't want to lean too directional. I don't want to be too bullish or too bearish, right? At the current moment, I simply want to be directionally neutral. And for that kind of a trade, the best option for me at least is a short strangle. Moreover, if we come down here and take a look at the implied volatility for the stock, it's still astronomically high right now. Right, the current IV for United Airlines is at 86%, which translates to an IV rank of 89% and also an IV percentile of 99%. So basically, this current level of implied volatility is just shy of being the highest it's ever been in the past 1 year. Right, and that's because the true highest point was right there a few days ago when the implied volatility peaked at above 92%. So bottom line here, the options on UAL right now are still extremely inflated. The prices are very, very expensive. And so therefore, that makes this stock still a great option selling opportunity. So that's what I'm going to do right now. So with that said, we'll come over to the trade tab. And for this trade, I'm still going to be in the April 1st weekly expiration cycle, 23 days left to go. And as you can see here, I've already gone ahead and picked out my strikes. In particular, I'm going to sell the 29 strike put option just a bit below that major support level. And then for the call side, I'm going to sell the 41 strike just above that major resistance level. So now I'll right click on the call option here and go to sell and strangle. And here we go. That brings up the sell order down below. For this trade, I'm going to sell 2 contracts each. And for each strangle, I'll try to collect about $175 of credit. So in total, that would be $350. And then final step is to go to confirm and send and check the buying power effect. In this case, it's only about $700. That's totally fine. So we'll go to send. And no fills yet on this order. So we'll come back to the monitor tab and perhaps change my price a little bit. So right there is my order. Limit price is $175. Mark price still $175. But perhaps I'll come down a few pennies and see if I can get filled right away here. So I'll come down and try maybe $172. Confirm and send and send. And there we go, just got filled at 170. Had to come down 2 more pennies there. Very nice. So last step is to come down and create my GTC closing order. So now I'll go to buy and then strangle. And here we go. This is my closing order. Going to try and buy back both contracts, 41 strike call, 29 strike put option, and I'll try and do so for half price. So half of 170 is 85. And then lastly, we'll make it a GTC order so it's always in place. Confirm and send and send. Okay, welcome back. I hope you enjoyed those few clips there. And so now also, I do want to touch on 2 new trades I put on yesterday as well, although I was not able to record them. So very briefly here, let's come over to the charts and go to CRWD. This is CrowdStrike, which is basically a tech company in the cloud computing space. And they had earnings yesterday, or I should say 2 days ago after hours, and it looks like they definitely beat expectations, and this stock zipped up quite a bit. Now, if I zoom in here a bit, take note of this white line right there. This is, as the way I see it, a very major resistance level, which as you can see is right around $200 per share. Obviously not too long ago, CrowdStrike did try to pierce above that point, but it failed. And also it did try and do the same thing back over here. Looks like in mid-January, again, came back up to this point, touched it and failed. And then of course, prior to this point, this line was acting as a major support level, which you can see plainly right there. So point being, once this stock skyrocketed after that earnings announcement, look where it got to. It came up and exactly touched that resistance point and then backed off. Now today, as you can see, it is coming back a little bit, but so far it has remained below that point. And so ultimately here, at this point, once CrowdStrike got to right around $200 per share, that's when I stepped in and sold. Coming to the trade tab now, I sold the 220 strike call option. And I did so for a starting credit of $740. So at this current moment, this trade is looking pretty good. right? This stock has come down a little bit since I sold that option, and therefore the price of this option has come down a bit as well. So that's CrowdStrike. And then also, let's come back to the charts and go to BIDU. This is a Chinese stock, which provides internet search services in China. And so for this one, if we zoom in here a bit, take note of this now former major support level right around 135-ish bucks per share. As you can see, many times in the past where this stock bounced off that point. And so yesterday, once BIDU got back down to and touched that point once more, I stepped in and sold a put option with a 125 strike. So all the way down here. But unfortunately, as luck would have it, my short put trades have not been going too well, at least directionally speaking, as of late. And of course, that's because we're in a bear market, but I still do like to have these kinds of trades on to balance out my portfolio, right? In case I am actually totally wrong about this current market environment, if stocks totally recover and go higher, then I definitely do want to have trades on that would benefit from that. Now, that being said, with today, BIDU coming down so far, right? The stock is down by over 8% at the current moment. And with it being below my 125 put strike, that means currently I am short 100 shares of the stock. And of course, in that way, as you saw with my UAL position not too long ago, if the stock continues to move lower, I still have the potential to make money on this trade. So we'll just have to wait and see what happens here. And then finally in this video, let's come back to SPY and take a look at what the general market is doing going into the weekend here. And so as I showed you earlier in this video, this major resistance point, which formerly was acting as support, broke on Monday. And for the entirety of this week, we have remained below it. And as you can see on Wednesday, it looks like SPY tried very hard to break back above that point and push higher, but this line here was confirmed once again as resistance, and that happened once more again today. SPY opened literally right below that resistance point, and so far today, the market has been doing nothing but going lower. And so this here is why I said at the beginning of this video that things are still looking very bearish right now. Right, major support levels are still failing and flipping to resistance, which are still holding as resistance. And so at this point, my expectation for next week is to see the market come down lower and lower. And in the case of SPY here, to retest the lows that it made pretty recently. So this candle right here was the beginning of the Russian invasion of Ukraine. And obviously, as you can see here, stocks went crazy when that happened. So again, if SPY cannot get above this point here, then of course the path of least resistance is to simply go downward. And then if you come over to QQQ real quick and take a look at the NASDAQ, this index has not even made it close to its major resistance point right there. So again, this line here corresponds to the exact same point that you saw on SPY. And like I showed you, SPY at least got up to and touched that point many times and failed. But again, like I said, for the NASDAQ here, it has not even gotten close to that point. And we already have once retested the lows that we made once the Russian invasion began, right? And of course, I was not surprised to see a nice bounce after that point. But if we come down once again to retest this level once more, perhaps at this point it could break and we might see another very large leg down lower. So definitely be very careful out there, everyone, and use bullish positions very sparingly. Like I said, I only use them to balance out my portfolio, but by no means is my entire portfolio leaning bullish at the moment. I'm still very much a bear on this market, and until the charts convince me otherwise, then I will continue to be one. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.